steel-toed shoes, but are those slippers?
Yeah, my flip-flops deteriorated in a recent trip abroad.
Okay, so we've upgraded from flip-flops to slippers, which is good news. Dave is the founder of 500 Startups. What do you tell us about, is it true that you recently funded your 500th company?
That was probably earlier this spring. I think we're a little over 600.
So do you need to change the name now? 5,000?
No, it's a brand, not a goal.
So tell us what you do.
What do I do? I cause trouble most of the time. I invest in startups. We invest in startups. 500 Startups is a venture capital firm. We currently have about 80 million under management or so. We have been around for about 4 years. And we run an accelerator program in Mountain View, actually another accelerator program in Mexico City. We're opening an office here in San Francisco probably next month. But then we also have people on the ground in 5 other countries, and we do seed investing as well as accelerator.
And you yourself spend a lot of time abroad organizing trips.
Yeah, probably on the road about 6 months out of the year, and that'll likely continue for a few more years.
To the consternation of your family.
Probably, yes. Although they're sort of used to it at this point, I think.
So we just had a fascinating conversation about the overall state of entrepreneurship, and in particular innovation outside of Silicon Valley. I'm curious, for your view, is the center of gravity still here, and where are the other clusters of energy, and are they simply mimicking the valley, or are they creating their own unique propositions?
The center of gravity is definitely still Silicon Valley. There's major sort of metros in a bunch of other places, both in the US and around the world. Probably most recently New York metro is definitely a very large center of gravity. LA is starting to become a pretty significant presence. Boston and Seattle have been significant presences. There's other places in the US that are also interesting, but actually around the world, London, Berlin, Beijing, Shanghai, in India, probably Bangalore, Delhi, Mumbai, Japan and Korea to some extent, although I think the market opportunities there are bigger than entrepreneurship at the moment. We've done a lot in Latin America, so also Mexico City and Sao Paulo and a few other places. And then just starting to spend time in the Middle East. And there's plenty of other stuff going on too. If you invest down the stack into telecom and infrastructure, Africa is actually a pretty interesting place right now, although we haven't done much there yet.
And in our previous discussion, we seemed to kind of center on 2 primary ingredients that are missing in other parts of the world. One, investors that kind of understand the model, are tolerant to failure, and pushing entrepreneurs, and then the other being a market that's receptive to a new company and to disruption. What would you add to that list?
I think on the front end, it's capital access and mentorship, and on the back end, it's exits and liquidity. That's the same thing. On the front end side, it's probably, at least for the stuff that we're looking at, which is technology-based entrepreneurship, and I would sort of even caveat that to say it's just generally entrepreneurship where there's technology involved, not explicitly just tech. A lot of those markets around the world, there are definitely experienced entrepreneurs, but there's not that many generations of experienced entrepreneurs in internet and technology areas, so there may be 10 to 20 years of experience, but there's not 40 to 50 years of experience like there has been in the Valley. There are usually lots of people with money and even lots of investors, but not very many investors in early stage tech. There may be late stage investors in tech, there may be early stage investors in non-tech, but there's not as many people in sort of the type of investing that's been popularized in the US maybe in the last 20 or 30 years. And just, those are the 2 factors I think really in the front end. And those are getting solved, so it's not like that's a huge problem that won't get solved. There's greater access to, I think, a lot of information, so even if the mentorship isn't local, there's availability of a lot of the ideas, and maybe some best practices and a lot of failure that's available to people. Really, I think the lack of risk-oriented angel investors and seed funds at say, 10 to 100 million in size is probably the limiting factor in most of those markets.
So if we could just clone you and drown the version of Dave McLure in every country in the world,
that could cause serious damage to the fabric of space and time. But I think there are starting to be a lot of active seed funds, not a lot, there are starting to be some active seed funds in very interesting places, and there's starting to be more angel investors active in those areas. But probably the biggest impediment to that is really just visibility on exits. Most of the historical exits internationally are just, there hasn't been very many, even though I'm very optimistic for the future, most of that's kind of over the horizon. So a lot of investors, or would-be investors and angels in early stage tech, kind of want to see a pattern before they start really throwing a lot of money at it, and that pattern isn't very much visible to a limited extent in Europe and maybe China, but not so much in very many other places.
So what are the markets now that are exciting you? And what are the markets that where you just feel like if you hear another business plan around that, you're just going to kill yourself? What has you really tired?
I'm assuming you're talking geography right now.
I was actually talking
category?
Category, yeah.
So we're pretty broad on a lot of that. I think we do a lot of consumer commerce. We do a fair amount of SaaS business solutions, not so much on the enterprise side. We started to do a lot more in education and family, what we call family tech, really targeting sort of kids under 10 probably, and moms and parents and family. But there's a huge swath of businesses that I think you wouldn't normally consider to be tech that are under attack by tech-related businesses. Mark Andreessen's essay on software eats the world is sort of a broad story around that, but just very briefly, pick any business out there and sort of think about if you could rebuild the core business with much less overhead and probably better margin efficiency with a startup, and then if you could use internet marketing techniques to acquire customers with better unit economics, you can probably go out and beat almost every industry where there isn't like really defensible IP or something like that.
Yeah, this is, in my world, that's basically the story of Amazon, going in every market and just undermining the entrenched competition that hasn't changed in decades.
Yeah, and I think we're just seeing that in industry after industry. So a lot of stuff we're looking at right now isn't core tech. It's like, hey, food delivery is a really big business that's not very savvy about tech, and a lot of people eat. And so it's a huge business to go after.
Did you invest in Instacart?
We did, but we probably invested in about 20 to 25 businesses that have food-related sort of customer focus or vertical segment focus.
Okay, so you answered half the question. What's kind of exciting you now? Is there anything that you're kind of done with?
Yeah, I think I'm finally comfortable saying that video is exciting. I think we sort of, there's an opinion about mobile for about 10 years that was wrong, and now in the last 5 years it's finally right. And I think around video, it's probably been that way for the last 10 years, and now I think it's finally right. I think there's really good conditions now for producing video cheaply, to some extent measuring it, and hopefully monetizing it, which has been kind of the last piece of that. So we're probably going to start doing a lot more video commerce-based investments next year. YouTube as a platform in particular has just made it really easy to distribute to reach a lot of people. The monetization opportunity is still not perfect there, but that is getting a lot better. So producing modest quality video at low cost, and then tying that to a transactional model so it's not based on just an advertising and content production model.
One of our previous panelists suggested that the one bubbly aspect of today's current environment is angel investing in accelerators. Do you feel like it's become crowded?
I would say there's a lot of people piling in, and not all of those folks are super knowledgeable. So even though I generally think there's not much damage to come from just a lot of angel investing, a lot of accelerator, popping up. Yeah, there's probably a lot of shit out there that's come home to roost in a few years. But on a parallel basis, I would say there's probably too many business schools out there as well, and until the number of accelerators is equivalent to the number of business schools, I don't think we have too many. and I think that the economics behind accelerators are probably a hell of a lot better for the economy than business schools necessarily. So I mean, I think if we become a nation of laboratory experiments around accelerators that have a lot of $50,000 to $100,000 failure, that's probably better than a nation of business schools that have a lot of $50,000 to $100,000 graduate success.
So how do you, in an increasingly crowded capital environment, how do you describe to an entrepreneur the 500 startups advantage? What's your value add?
We're probably mostly focused around online marketing and distribution being our core differentiator. To some extent, the geographic reach of our community is another big one. I mean, we're a little different than most other accelerators in that we probably have at least national, if not international, aspirations and reach, and there's probably maybe 5 to 10 other accelerators that have that sort of capability. Most others are geographically fixed. I think you're starting to see a lot more accelerators that are having vertical market focus, which I think is great. So like Rock Health in healthcare, a number of different hardware accelerators out there now, education accelerators. So, as with any business, you're going to have branding, sort of differentiation and vertical focus that I think is useful. So we haven't really specifically chosen one of those themes. We probably have 3 to 5 that we focus on, but we're still trying to have national, again, if not international, approach.
I sense that a lot of people in your world are now excited about something called AngelList. Tell us what that is and whether it's started to change the game in the world of angel investing.
Sure. So full disclosure, we're investors in AngelList.
We just assume you're investors.
I've been friends with Naval for a while since he was doing Venture Hacks, and we've been...
Tell us what it is.
Sorry, yes. So AngelList is a platform for connecting investors and entrepreneurs, and there have been plenty of other attempts at that before, but I think this one's actually working quite well. Right now, it's mainly a platform for making introductions. In some respects, it's also a platform for facilitating capital access.
So a way for a startup entrepreneur to go and pitch their idea broadly via website tools to a whole range of interested investors.
Yeah, and there's, like with any platform, there's a lot of stuff that's not super high quality, but the ability to sort of level the playing field for investors and entrepreneurs to see what's going on in the market, to make that more transparent, I think has generally been a very, very big positive thing. And there's, actually quite a number of deals being facilitated through the platform. I think, probably over $10 million a month in capital now, and that's probably a stat that's a little bit old, so it might be more than that.
And are you doing a lot of deals on AngelList?
We do. So probably, I'm guessing, depending on how you count it, probably between 20 to 50% of our overall deal flow comes through AngelList one way or another. All of our accelerator applications are coming through AngelList, so that's about, right now I'd say probably around 1,200 to 1,300 applications per quarter. We end up doing about 25 to 30 of those deals per quarter. On the seed side, it's maybe a lower percentage there, but we still look up companies there. So even if we maybe reach them through other venues, we would probably funnel them through AngelList just for the workflow and for the profiles, and I think more and more people are doing that.
Okay, start thinking about your questions for Dave. I want to ask you one more, which is, now that you're several years into this, what have you learned about the qualities that go into a successful entrepreneur? What are the ingredients?
I don't know. I'm not sure I'm experienced enough to be able to tell that yet, except in the rearview mirror. I think we're looking for people who are risk-oriented, which usually means crazy. We look for people who are knowledgeable about a customer segment or problem, and that usually translates into passionate. So it's usually passionate and crazy, but hopefully knowledgeable within those constraints. We probably are a little less of a home run hitter than maybe other venture capitalists, so we're kind of looking for not huge markets and huge disruptive stories, but more of people who have some sense of business model. We're less concerned about whether the market is small and more concerned about whether the product is functional and if there are customers.
How about experience? You want to see someone that has spent time on Wall Street or another technology company, or started a company and failed?
Only on Wall Street if they're doing a financial startup. I would say, not that that's a negative, but it's not a significant positive. We probably would optimize for entrepreneurs that are between, I'm going to guess, say, 25 to 35. We definitely have funded people younger than that. We've funded lots of people older than that, but we're optimizing for people with 5 to 10 years operating experience. If they don't, we don't generally fund people right out of college, although we have. We usually like them to have, 5 years of stubbing their toe on somebody else's dime first. If they're still looking to us for capital after they're 10 or 15 years in, that might indicate there's a challenge or a problem. We hopefully folks who really have their shit together probably don't need us once they're at that level. But I'm not saying they're not great entrepreneurs in their 40s or 50s. We have funded them as well. But mostly, we're looking for a combination of engineering, design, and marketing. Those are kind of the operational skill sets that we really think are important for what we are funding anyway.
So I'd love to hear what questions you guys have for Dave McLure. Yes, sir.
Hey Dave, thanks for your time tonight. So I'm Pedro, I'm with WiserGo, one of the guys that's trying to get in 500, so we'll chat later. One thing, so you forgot to, you guys forgot to mention that there's actually a Portuguese startup in 500 in Tiago from Top Desks.
I think there's actually 2 or 3.
Yeah, there you are. So anyways, the question is about, the conversation is usually turned into how do we help the Portuguese startups succeed outside Portugal because the market is tiny and whatnot. So I'd like to actually flip it and say, and ask, based on your experience traveling around the world, what do you think is probably 1 or 2 key things that the government could do to actually entice other entrepreneurs, international entrepreneurs, to actually move into Lisbon or Portugal more broadly and bring their energy, bring their know-how, bring their expertise, and with that also potentially other investors, So how do you...
Yeah, I think it's not a dissimilar issue for a lot of other countries, even larger countries. Particularly for smaller countries, I think looking at ways to create, attractive business markets, hopefully, streamlining some regulatory process and tax and labor laws so that business creation is easy and not expensive. On a more granular level, I think the 2 things that I was talking about before on the front end, encouraging experienced mentorship to be available. Sometimes that's available from the country, sometimes it's available outside the country, and so bringing people in to do that. I think specifically, this is a little harder, but encouraging the creation of a lot of little funds, so $10 to $100 million funds, and probably some flexible structure for encouraging angel investment. I'm not a big fan of government doing direct investing, but maybe capital matching and just making it easier for small fund creation to get off the ground. Sometimes subsidized fund creations can be a good thing to get started. The other one that I mentioned before, exits and liquidity on the back end, kind of hard for governments to really have an impact on that without some very complex financial engineering, but that might be another thing to look at, easing laws on acquisition, whether that's from global multinationals or from local markets.
Thank you for that question. Before we go to the next question, I just want to ask Dave the Bitcoin question. Where I imagine, since you're friends with them all, that you are bullish on Bitcoin. Tell us if that's true and why.
I'm bullish on Bitcoin companies. On the currency itself, I'm neutral. My guess is the currency probably has headroom, but I don't prefer to be a currency speculator. I'd rather help sell picks and shovels for people who are mining Bitcoin. In this case, that's a literal statement. Actually, back at our office at Mountain View, there's a simulcast going on right now about one of our Bitcoin companies.
Simulcasting what? Mining the first...
So we have a very sexy investment in a Bitcoin company out of Brazil, so it's both Brazilian and Bitcoin, called BTC Jam. But we've done a few investments in Bitcoin, and I think it's an interesting category. We're not exclusively focused on it, but I don't think it's bullshit.
Great. We are going to go to the microphone back here, and then we'll move up.
While we're talking money, quick question. The Jobs Act was kind of held out as a way to get everyday investors more involved in the earliest stages of companies. A really cool thing with AngelList is you got syndicates, but still it's for accredited investors.
That's, yeah, I believe more generally correct, yes.
Do you see us moving more towards like a Kickstarter, but for equity in the early stage, or is that just a pipe dream?
I think there's a lot of opportunities for different types of small investors and customer-funded stories to be helpful. So a lot of what people have been talking about as crowdfunding has really been customer-funded pre-purchase and or donations on platforms like Kickstarter and others. I think there's a lot of the crowdfunding stuff which is targeted at small investors who can afford maybe between $1,000 to $10,000 and just making sure that's not a substantial portion of their income. I'm a big believer in opening the gates to letting everyone invest. I don't think net worth is correlated to intelligence in investing, but I think there is some reason to maybe limit the amount of investing that's done as a percentage of income. But I still think that in the near term, what's probably going to be more impactful on the market is both the customer-funded pre-purchase stuff, which isn't really investing, that's just donations and pre-purchase. And on the other side, I think a large number of angel investors getting into the market probably will have positive effects over the long term, although you could see some ups and downs in that. There is a lot of unsophisticated investors who are jumping into tech right now, and I think that'll probably result in some tears down the road, but that's okay. That's generally a good thing. By the way, on syndicates, I think, just to be more specific about that, so the syndicate to backer function on AngelList, to me what that's really disrupting is venture capital fund creation. So 4 years ago when I was trying to get a fund off the ground, actually 6 years ago, in 2008, summer of 2008 when I was trying to get a fund off the ground, it would have been really much more awesome to be able to use a platform like AngelList to just get a syndicate of $500,000 to $2 million together. That would have been much easier for me as a first-time VC than trying to figure out how to raise a $20 to $30 million fund, which is incredibly challenging for a first-timer, or at least for me.
Okay, thank you for the question. Back here.
Hi, my name is Jennifer Arcuri. I'm the founder of the InnoTech Summit. My question is a two-part question. Coming from London, I'm just curious your thoughts on what you think of that tech scene over there. And if you hadn't met any cool startups, would you like to meet one? And then secondly, back in October, we did an event at the World Islamic Economic Forum where we launched a £100 million fund with the Mayor of London, Boris Johnson.
Is that off the ground yet? I just heard it was announced.
Yeah, it's the Leaf Fund if you want details. I got it. But it was more or less to set up a partnership between the UK and the Middle East, and I thought it was very interesting. As an American over there, being able to do this, and there was a lot of opportunity. And they love London, but of course they love Silicon Valley too. So just some thoughts on what you see happening in Jordan, the Emirates, Saudi Arabia.
Sure. Yeah, well, as it happens, I was just there. I spent about 2 weeks in the Middle East a month ago. And we've done about 5 investments in Jordan. We've done 1 in Turkey, and we're working on 1 in Saudi Arabia. Jordan's a really interesting country. I actually have gone there twice now, and you don't normally think of that as the center for Arabic entrepreneurship, but I actually think it is one of the centers.
Were you at Oasis 500?
Yeah, we went over there briefly. And we took a group of folks on a trip called Geeks on a Plane to the Middle East, and we went to Istanbul, Turkey, and Amman, Jordan, and then Dubai, Abu Dhabi, and then I separately went to Jeddah in Saudi Arabia for a little bit. So first question, I guess, London. Definitely an interesting market, a lot of capital there, kind of an expensive place to start a startup, so even though there's a lot of talent there, I might say in Europe, I might lean a little bit towards Berlin being a better place to get a startup off the ground in terms of cost structure. But London is certainly the number 1 or 2 place in Europe right now. I think the Arabic-speaking market as a whole is just fascinating, and we've been trying to spend a lot more time learning about that. Our lens for thinking about investment, 50% of our investments are here in the Northern California area, another 25% are the rest of the US, and 25% are the rest of the world. But we tend to think about investments based on language speakers, and so English, Mandarin, Spanish, and Arabic are sort of global priorities. There's probably 10 to 20 other countries that are interesting, either 50 to 100 million speakers and high GDP, or 100 million to 200 million speakers and lower GDP. And then rate of internet penetration, rate of GDP growth, other things like online payment factors are also decisions. But if you look at the overall Arabic-speaking market, it's probably 300 to 500 million speakers. It's a very young population that's got a lot of growth. Varying levels of internet penetration still generally low. In countries like Saudi, very high rates of internet penetration, very high rates of monetization. So I mean, it's a little bit fragmented, but it's still an interesting market if your horizon is 5 to 10 years. I kind of look at the Spanish-speaking market similarly, although it's a little bit more near-term. So in terms of places that are most exciting for us right now, actually I started to answer that, but the Spanish-speaking market in Mexico is really the most interesting market. It's right under our nose. It's 100 million people, if not 200 to 300 million if you consider the rest of the countries. It's a widely educated workforce. The brand perception in the US and Mexico is probably negative, but unnecessarily so. There's a lot of shit going on the borders, but that's not really that bad in a lot of the rest of the country, and it's not really that much worse than in other places around the world. So business climate's great. It's really just limited capital access. So the Spanish-speaking market is a tremendous opportunity, and a lot of the focus for us internationally right now is looking at Spanish parallel models to a lot of things that we've seen in the US and other places. I just think it's overlooked by a lot of people. As much as we're interested in China and India and Southeast Asia and others, Spanish-speaking market and Brazil is a slight parallel to that, are both really, really interesting.
Great. Another question up here. Okay. Right here.
Hi. I've got a short question for you, Dave, but before I do, because of a lot of questions here of interest in capital, I just want to put a little plug in. I'm working on a book for a performance-based capital structure. If anyone has called the fair share model. You can Google it and get some insight into it, but it seems to be an approach to try to marry up the middle class with investment opportunities and make it safer for them. Here's my question for you, Dave. 600 startups now?
Well, probably only 400 that are still alive, but yeah, 600 we've done so far.
So if you were to split, what would you say your ability to recognize a bad investment? Has it improved with time? And separately, has your ability to identify a good investment improved with time?
Most of our tests for decision making are fairly quick on the first check. So we generally are able to make decisions, whether they're good or bad, probably within 2 15 to 30-minute meetings. Usually we're looking at product, hopefully it's functional, and we're sort of looking at stats about the business. And, we may do a little bit of background checking on the people, but generally most of the folks we sort of have some connection to. So our evaluation criteria, even though markets are important and people are important, our ability to figure those out takes forever. Our ability to look at and understand product is fairly straightforward. So we are really doing a product evaluation from a user perspective, and then we're trying to look at stats on the business, if there's reasonable amounts of customer usage or monetization. Then we say yes or no. Whether that's a good decision or not, whether it's a bad decision, we'll find out probably in about 3 to 6 months. We usually find out the team isn't executing, or the product isn't that interesting, or there's no ramp in customer usage or revenue. And so in 3 to 6 months, we'll know whether we made a bad decision, and we won't continue investing, probably. Whether it's a good or a great decision probably takes between 18 to 36 months. And that's sometimes based on the team and sometimes based on the product and the market. But probably within a year or two, we'll see whether there is, ramp on the customer usage, on the revenue, whether other investors jump in, whether the team can build a larger team. And so usually we can figure out whether we're idiots or they're idiots within 6 months. We can figure out whether they're geniuses and whether we might be good at seeing genius within a year to 3 years.
But have you been able to improve your process, or are you getting better over time?
I think so, but I mean, it's anecdotal assessment right now. You probably have to look at our performance on investments 5 years in. We're only 3 or 4 years in, so at the moment I would say, I think we're getting better. You can probably judge for yourself in a few more years. We see a lot. So I mean, the thing is, I generally think that venture capitalists think too highly of themselves. My guess is, this may be a crass statement, but I think I can teach anyone to be a decent venture capitalist given $500,000 and 6 to 18 months. I think if I can let them make 20 to 40 decisions over an 18-month period, they'll probably start figuring it out. It's really straightforward in a lot of cases. We're glorified mortgage processors, really.
Wouldn't a venture capitalist say that part of their responsibility is not just making the investment, but guiding the company and improving?
Yeah, but that's bullshit. I mean, the best entrepreneurs don't need us, and we learn from them. And the worst entrepreneurs we can't help anyway. So really, if we're really awesome, we might help the entrepreneurs that are sort of in the middle, which is what I call tweeners, and maybe if we're lucky, we push a few of them over the finish line into being winners. But I mean, there are definitely people who have domain expertise, and within a sector, I think there's people who understand that business. Within sort of a stage of financing, there's people who understand what's going on. But 90%, if not 99% of the business success is the entrepreneur. It's not the investor. The investor takes a board seat for their own selfish reasons, and those are generally logical reasons, but to suggest that the board seats are primarily for the entrepreneur's benefit is complete bullshit. And I think that's a lie that the industry tries to press upon entrepreneurs to get deal flow.
If only we had a Mark Andreessen or a John Doerr up here to have this debate with you.
Well, those guys are awesome, but generally speaking, you're not going to get those guys. So,
I think we have time for one more question. I would love it to be an obvious question. Yes.
Hi. So I got two completely unrelated questions. I would like to squeeze in the first one. All right. So you were talking earlier about business opportunities, and you mentioned something about the food industry. So I think it's a very old industry, and the only way you can, the only place where you really need to innovate is pretty much the last mile to the customer's door. And then, you can correct me if I'm wrong. And
generally, any big, dumb, old industry is easy to beat, and there's lots of ways to beat it. So.
Yeah, but it's like you're tapping to the same industry Webvan was in once. So I'm wondering, how could you, is our market today different than what it was before, and we're kind of ready for Webvan this generation, or?
We were probably ready 10 years ago. They just fucked it up the first time.
Amazon is, as of today, driving
the real innovation that I think I was talking about there is in internet marketing. So the unifying theme in a lot of all these businesses and how we attack them, and really part of our investment thesis is just there's been a complete sea change in how human behavior operates with respect to media and marketing. So the way that we experience, 10, 15 years ago, there was a lot of people reading newspapers and watching television. And now there's a lot of people not watching television, they're watching YouTube, and not reading newspapers, they're looking at other media. And so just the prevalence of these types of devices, at least for 2 to 3 billion people in another 5 years, probably everyone, and mobile devices, just completely changing how we experience products and services. And we, as entrepreneurs, haven't generally understood that and changed how we do that. So we think about technology businesses from tech, and really what's going on is a revolution in marketing and communications. And so the ability to do scalable and cost-effective, if not profitable, customer acquisition via all these search, social, mobile, video, and local channels. Largely a phenomenon that's happened in the last 5 to 10 years, and most of the expertise is not well distributed. So if you're looking for somebody with 10 years of mobile marketing expertise, they don't exist. The platforms have only been around for 5 years. If you're looking for how that's done with online video, those are really only been around for 3 to 5 years. And yet, if you talk to like people in Saudi, like they watch more YouTube than they do television, like by a huge factor, right? And so like whole nations of people are now experiencing each other and products and services using widely different platforms than just 10 years ago. But the way we build businesses has not changed dramatically. And so thinking about them as tech businesses, you're missing the point. It's really around customer acquisition as an innovation. And so the things that we're looking at is not so much can they be great coders, yes we do that, are they great designers and user experience, yes that's important, but really do they understand how to do scalable customer acquisition via internet channels and not just based on thoughtful advertising campaigns, but really scalable and measurable techniques that are best practices and are learnable. So I'm being long-winded here, but I'm trying to emphasize the point that that's what's really happened. And that's why you can attack every business out there. And that's why you can beat the crap out of them with a very small amount of money. And that's why, frankly, I'm extremely optimistic to be doing what I'm doing.
I think we have to leave it there. Please join me in thanking David McLure.